The trade is already wrong, but you haven't accepted it yet. Here's the solution most traders never hear. Small losses don't become big because the market moves too far. They become big because hope takes over when discipline should step in. If you learn to recognize that moment, you stop bleeding capital immediately. You know exactly how this starts. You enter a trade with a stop loss. Price moves against you. Not violently, just enough to make you uncomfortable. And that's when the conversation begins. It's just a pullback. The level will hold. It always comes back. That voice sounds calm, even reasonable, but it's not logic speaking anymore. It's hope. Hope shows up when your plan has already been challenged. It doesn't arrive early. It arrives precisely when discipline is required most. You don't widen stops because you're reckless. You widen them because you want relief. You want time. You want the discomfort to go away. And the market knows this about human behavior better than you think. You've done this before. You've watched a loss approach your stop and thought, let me just give it a little more room. And for a moment, price pauses. Relief hits. You feel justified. See, I was right to wait. That brief relief is dangerous. It trains your brain to associate rule breaking with comfort. The next time, you hesitate even faster, and now hope has a pattern. Hope turns small losses into big ones by slowly removing your boundaries. The stop loss that once protected you becomes negotiable. The risk you accepted before entry becomes unacceptable after entry. And once risk is no longer fixed, the trade owns you. You tell yourself you're being patient, but patience only applies when a trade is valid. Once your original reason for entry is gone, patience becomes denial. Professionals understand this distinction. Amateurs don't, not because they're unintelligent, but because hope feels responsible. It feels like giving the trade a chance, but markets don't reward chances, they reward execution. If this already feels uncomfortably familiar, pause right now. Like the video, subscribe to the channel, share this with someone who keeps saying, I'll just wait a bit longer. This message saves accounts. Hope also feeds on the idea of being right. You don't want to exit because exiting means admitting you were wrong, and being wrong feels personal, even though it shouldn't. You forget that trading isn't about proving intelligence, it's about managing risk. The market doesn't care how good your analysis was, it only responds to price. So you wait, price moves further against you. Now the loss isn't just financial, it's emotional. You're no longer deciding based on logic, you're defending yourself. And once defense replaces strategy, outcomes get worse quickly. You start thinking about news. Maybe there's a catalyst coming. Maybe the session will reverse. This is hope outsourcing responsibility. Instead of acting, you wait for something external to save the trade. But markets don't rescue traders. They expose behavior. Hope also changes your perception of time. 5 minutes feels like nothing. 10 minutes feels manageable. 30 minutes feels invested. The longer you stay, the harder it becomes to leave. This is called emotional anchoring, and it traps more traders than bad entries ever do. You don't exit because you've already stayed too long. That's how small losses grow teeth. You might even remove the stop entirely, not consciously. You just drag it so far that it no longer matters. At that point, you're not trading anymore, you're wishing, and wishing is the most expensive activity in the market. Drop a comment if you've ever said, I'll just see what happens. That phrase has cost traders more money than bad strategies ever have. Here's the uncomfortable truth. Hope is not optimism. Optimism exists before the trade, during planning. Hope exists after the trade is invalidated. One is preparation, the other is avoidance. When you confuse the two, you bleed capital slowly enough that it doesn't feel dangerous until it is. So how do you stop hope from turning small losses into big ones? You start by deciding that invalidation matters more than intention. You entered the trade for a reason. That reason can disappear. When it does, you leave. Not when it feels comfortable, not when it comes back a bit, immediately. This requires humility. It also requires practice, but this single habit will change your equity curve faster than any indicator ever will. Next, you treat stop losses as commitments, not suggestions. You place them when you're calm and rational. You don't touch them once you're in the trade. If you feel the urge to move a stop, that's not a market signal, it's an emotional one, and emotional signals are warnings, not instructions. You also reduce position size until losses feel tolerable. If a small loss feels unbearable, the problem isn't the market, it's your sizing. When risk is appropriate, you don't need hope to survive a loss, you accept it and move on. Calm traders don't widen stops, stressed traders do. Another powerful shift happens when you stop asking, "What if it comes back?" and start asking, "What if this continues?" Hope only considers one direction. Risk management considers both. When you force yourself to visualize continuation against you, exiting becomes easier and earlier. You also separate trades from identity. You are not your last trade. You are not your analysis. A stopped-out trade does not mean you failed. It means you followed rules. When you internalize this, hope loses its emotional leverage. Most importantly, you learn to value capital preservation more than ego preservation. You'd rather look foolish exiting early than look stubborn holding too long. Professionals choose survival over pride every time. If this video is helping you rethink how you manage losses, like it, subscribe, and share it. These are lessons most traders only learn after expensive mistakes. Over time, something changes. Losses stop spiraling, drawdowns shrink, confidence stabilizes, not because you're winning more, but because you're losing correctly, and losing correctly is what makes winning possible. Here's the final truth you need to hear. Hope is not evil. It just doesn't belong in execution. You can hope before the trade, you can hope after the trade, but during the trade, you execute. No exceptions. If you've made it to the end, you're already doing something most traders never do. You're confronting the real reason losses get out of control. Like the video, subscribe to the channel, comment the moment you usually start hoping instead of acting, and share this with someone who needs to hear it before their next stop loss becomes optional. Small losses are harmless. Hope is not. And once you learn to act when hope shows up, big losses stop happening.